Manchester United, arguably the world's most famous football club, but that sort of fame doesn't necessarily guarantee you success in the business world. Shares listed on the New York Stock Exchange on Friday at $14.05, well below the $16 to $20 range that was marketed to investors.
No big scores for Manchester United as sales of shares in the world's best-known football team kicked off on the New York Stock Exchange. The debut for the debt-laden club was disappointing. The share price at $14, lower than the expected range of $16 to $20, and the shares rose only a few cents. But many of the fans are angry that the American owners, the Glazer family, will pocket their half of the money raised without contributing to paying down the debt that comes from the large sums they borrowed to buy the club 7 years ago. Analysts say the lukewarm reception for the shares underscores investor wariness for sports teams with their reliance on results and caution over initial public offerings since Facebook's shaky debut.
The initial public offering priced the shares at $14 each, lower than the $16 to $20 originally sought by the club's bankers. The sale raked in around $233 million, nearly $100 million less than hoped for. United are the world's most popular sports club. Management hoped to build on a large Asian following to build profits. Previous attempts to list in Hong Kong and Singapore failed to attract sufficient demand. Analysts fear that even in Asia, prospects of growth are limited.
Only 10% of the shares are being floated. There aren't going to be any dividends. People that buy the shares won't have voting rights. So what's in it for the investors?
Well, I think you'll be investing in a growth company. I think we play in the best sport in the world, football. Sky's a big part of that, and from our perspective, we can demonstrate the opportunity we have in terms of our sponsorship income, what's happening in the broadcast income. So you'll be investing in a great club in a great sport.